Hi, this is Simon with Trade and Form Coaching for Trade Review for Friday, September 27th, 2013. And today we're just kind of going to do a quick review. It was really quite a boring day. I think I pulled off 2 trades on the day, and I don't see a lot of need to kill a lot of time with going into a deep analysis of what was essentially a sideways day. So coming out of the day, the trade plan was quite simple. The buyers, in order to really squeeze control, needed to get above this white zone right here. And as you see, they never even could get to the white zone, much less above the white zone. So for me, when we're below that white zone, the other clues were in the morning, when we came in, I had said that, I kind of came in and drew all these trend lines here. And basically, trend lines mean nothing. It's just a line on a page. And the way I look at them is, if you've ever been on a highway, have had the misery of having to drive on a highway that's being constructed, which I have, and then you'll drive on it one day, you come back the next way, and the lines have all changed. They've repainted it and they're redirecting traffic in a whole new different direction. And that's what trend lines are. There's nothing that prevents your car from driving over one of those white lines, right? We just kind of respect it. We know it's there, but if there was a reason that you had to go over the white line, usually nothing serious happens. It works the exact same way with trading. All those trend lines are just indicators of which way the traffic is flowing at the time, but it can reverse at any time and go the other way. So I'm not leaning on that. What I'm leaning on are those levels that I use to develop those zones. Okay, and I'm using the trend lines in between to kind of get a good idea of overall which way we're headed. Make sense? So overall picture, we had to get above this area, okay, in order for buyers to get control, and then we had to jump up above here to really get a clear space to move higher. That was the concept on the day. It was quite simple. So until we did that, the other things I wanted to watch were tick, and the tick. And if you listen to that pre-market preview that I did, that's right underneath this trade review, I said one of the things I wanted to watch for was the ability to have gap fill. Gap fill was all the way up here, right? Half gap was right here. We never even made an attempt to get that done. So when we can't get half gap even, I read that as a sign of weakness. That's maybe I'm the only one who does that, but that's how I see it. And so that's kind of how I was looking at the day. When we opened up, if we'll flip back to the other chart, we were unable to even get half gap. We traded up into this resistance area and Thursday's low, and we rejected off of it. I actually took 2 trades out of this area. I had one trade here for 2 points, reshorted it again here for another 2 points. And the way I handled this trade was a little differently than I normally do, because I really thought we had a good chance with the weakness of coming down and visiting this initial support area. We didn't get it. That's okay. Our options were sideways, down, either to this point or to this point, and then back up into the prior day's range, which wouldn't have surprised me until we couldn't have any strength that was, or that we would open down, immediately push up into this range, push through the other side of the range, and then in some incredible type of day, push back above Thursday's high. Of course, we never got there. So I took a trade here, covered for half, reshorted that half when we pushed back up, covered that half again. That gave me 2 points. And then I stopped the trade out at break even on the second half. Now, I don't want to call it a trading error, but maybe a better decision could have been made. I did expect responsive buyers the first time into this zone, and that's exactly what we got. Most of my coaching clients took along in this area for obviously an easy 2-point plus trade, and I should have done the same. However, I've been very tired this week, and my trading decisions have not been where I expect them to be. So hopefully I get well rested this weekend, and I will be making better trading decisions. Along with that, I did short when we got up into this area, and I covered half. Shorted half a size because it goes in with my trading philosophy of this is the hardest time of the day. I want to lower my risk so that I don't have to have anxiety or be jumpy about these little choppy moves that it made. We eventually rotated to the downside. I got half my trade off of this. And then the second half got stopped out here at the end of the day for essentially break even. So that's how the day developed. There wasn't a lot to do. Less was more yesterday, and for me, the key tip-offs were trading below Thursday's lows, inability to even do half the gap off the open, another sign of weakness, and then there was just a general lethargic trading through the course of the day. Really, I should have been gone by 11 a.m. and just gone home and forgotten about it. So that's how the day set up. Sometimes trading is pretty straightforward and easy, and trying to overtrade it, trying to find more than there is to be seen there, will kill you. And that's where having a steady, everyday execution plan. And the reason why I am successful is because my trade plan starts from a familiar base every day, and I'm repeating a successful formula over and over again. I'm making slight variations. I might look to execute away from the white zone and for moves towards the white zone on certain days. Other days I might look for the white zone to be the center point and to push away from that to a certain direction one way or the other. But the way I come up with the areas I want to trade daily remain consistent. And that is the key to my success. And it's the key to making easy adjustments to my trade. But what most traders do when we get into a difficult period of time, as we have been here lately, is what they do is and what you don't want to do is you don't want to switch from one trading methodology to another. Because what happens is you're like, oh, this trading methodology isn't working. And you make a huge change. You go follow someone else who looks like they're doing something successfully. And maybe, unlike me or unlike any other trader you're following, perhaps they have a special indicator that they use that seems to be working well right now. So you abandon one and you pick up another. But what happens is just as that other starts getting good, well, then all of a sudden it stops working, and then you're caught right back in that same circle. And in the meantime, you go back and look at the guy you were following prior, and you're like, oh man, look at that. His system seems to be working again. The key to a trading methodology, system, whatever you want to call it, is that when it's having a difficult time accelerating, that you're either taking small trades or scratching those trades or very small losses on a consistent basis. So I believe for the week overall, I'm positive. I have to go back and tally up the spreadsheet, but I believe I'm positive for the week. It was a choppy week. I think I had 2 days up, 2 days down, and then with this day I was up. So I think I was 3 up, 2 down for the week. And I think I'm going to limp out of the month with 20 ES points. But think about that. If you trade 5 ES contracts and you got 20 points on the month, and this was a horrible month, okay? You took 20 ES points, that's $5,000 you made for the month. Not bad, not entirely bad, not at all. And that's considering it was a weak month. You trade 10 contracts, you obviously did better. You had 10 grand. But you can only do that. You can only increase your trade size. You can only get to the point where you're, even on difficult months, you're hitting 20 points in ES when you're consistent in your approach. You're patient both with yourself and with the market, and you let the market come to you. So anyways, I hope that simplified things a little bit, guys. Again, the key points of the day: lack of any kind of gap fill whatsoever, stuck below a bunch of downtrending momentum to the downside, weakness overnight in the London session, and then we didn't get any follow through on the London session to the downside. We did, however, have have trading opportunities that could have paid you. So we'll see what Monday brings. I hope everyone has a great weekend, and we will talk to you soon, me and my dyslexic self. I will talk to y'all later, guys. Bye-bye.